This is one of the most sluggish pairs you will ever find in the trading space. This is because this particular currency has low volatility. What does that mean? I explained it in the video before this one, but in this video, we'll be analyzing the slow volatility or rather low volatility euro against the Swiss franc and seeing if it's possible to even have trading opportunities in such a market that is so slow.
Now, as always, this is not financial advice. This is just me running you through my opinion and why I think that opinion is very, very valuable. So, without further ado, let's just head right into it.
So personally, to trade this market, I usually start from the way I do the markets. I start all the way from the monthly. On the monthly time frame, it is quite clear that this market has been in a bearish trend for years. Very, very bearish. Never really had like good up runs, always bearish in this market. Now, we only need a couple of candles in a month. We don't need to look at every single candle that has happened in an entire month to trade it. What we do is we zoom into the monthly time frame and we just look at the most recent sets of candles. What do we see here? Well, what we see here is we have a supply zone that has been utilized completely way back in 2024. And ever since then, the last candle we have, or rather the last supply zone we have, is way back here. So we'll quickly label this monthly, as this is a monthly supply zone for us. Now, just by looking at these sets of candles, we can say one thing is certain, right? We can say price has returned into that zone once, at least once, and that zone seems like it has been utilized. If it has been utilized, then it's becoming less effective. It's simple and short. You don't need long stories. You don't need to run away from the necessary. It is just the facts. A zone that has been utilized is already mitigated. Basically, is invalid at this point. So on the monthly, we do not really have any zone anymore as this price move is now efficient. So we can take away this monthly overview. However, we just remember that this month is currently in a zone where there is almost enough efficiency. But one last problem. Taking a look at these last sets of candles, as you know, the monthly candles are very, very powerful. We can see that we have wicks at the top of every single time price has returned into the zone. So what does this mean? This means that there is a high tendency that this place would always find sell orders occurring inside it and will constantly find selling pressure when price comes into this zone, as people or other traders see it as a very, very expensive place to sell and buyers see it as an expensive place to buy. For people who see it as an expensive place to sell, is more profit for them if they sell. For people who see it as an expensive place to buy, is less profit for them to buy, as it is risky. With this knowledge in mind, let's move on to the next time frame, the weekly time frame. Now, right here in the weekly time frame, we see a very similar scenario. Obviously, we had a break of structure to the downside on the monthly. Now we have another break of structure to the downside. But there's one last situation here. We have an unmitigated supply zone on the weekly. Price has not even come into the zone yet, making it a very fresh zone for us to watch out for. When price comes into this zone, there can be trouble. Not that there will be, there's no assurance, there's just a high tendency that there can be trouble in this market. So what does this mean for us? This means one simple thing. We can either wait for price to come in here, or we can figure out if price has a place where it's going to most likely buy from to find its way up into the zone. And what we can clearly see here is we do have a weekly demand zone way down here. As you can see, this is a weekly demand zone waiting for price to come down into it and possibly buy up. Now, the only time I see this weekly demand zone as valuable is if price should take out these highs. That is this high we have right here. If price can take out this high, maybe not even get into the zone, but at least take out this high and then fall down, I see this zone as a zone where I would love to buy from. As why in particular? Because I'll call this right here a very clear structural liquidity or inducement, if I should call it. So this is going to serve as a good inducement if price breaks above this zone. But if price doesn't break above this zone, there's a tendency that this zone will not have any weight. But then again, don't forget the major break of structure is to the downside, as the monthly break of structure is to the downside. The monthly break of structure to the downside is almost no longer valid. If this holds and this breaks, then the monthly supply zone is very valid, meaning price is going to continue to the downside. So we cannot predict anything from here, but we can only say we have areas where we are looking more focused on and hoping price does something when it comes to these areas. Moving on to the daily. Now, at this point, this is where I start to look at the fundamental aspect of the market. What is really happening right now when it comes to the euro against the Swiss franc on the fundamental grounds? What is happening when it comes to the economic data comparison? This is taking us straight to the fundamental analysis dashboard, where I already have the euro Swiss franc waiting for us. Now, the funny thing about the euro Swiss franc is it is currently neutral, with almost all information seemingly very yellow, except for the central bank difference rate, right? There's more favorable rates in the euro than you find in the Swiss franc. So meaning money is most likely going to be moving into the euro than it is going to be moving into the Switzerland economy. But let's check out what's been happening in this market for a while now. We'll head straight to score tracking, and we will look straight directly into the euro against the Swiss franc. Let's take out what has been happening all the way since April of the month. Now, we've seen price constantly fluctuate around the 50% mark. A little bit up to the 60, comes down to 50, moves around it. So this market has been neutral for a long time. Neutral, even though price has moved a lot, but it is neutral because the fundamental, or rather the economics behind this market, is not moving crazily. But if you take a look at what the leverage fund traders have been doing, they've been heavily funding the euro against the Swiss franc. But now, over a period of time, they seem to have slowly decreased that stance and reduced it down to a neutral zone. So this market is basically right at tug of war zone. And why I call it tug of war, what do I mean by that? I mean, we're at a position where anything can happen in the market. The market can run up, it can run down, it can decide to be slow. But being that it is a low volatility market, it's a very low volatility market when it comes to the euro against the Swiss franc. As you can see up here, its recent 14 days average move is 42.1 pips. That is not huge, not huge at all. Mostly small moves. Now, what does this mean for us? It means that this market is not running yet. And it means this is the time you can look into this market and decide, what do you think is most reasonable to do? Now, what I see here is on the daily, I can see a break of structure to the upside as the last break of structure, meaning there is more tendency for price to come down and buy up upwards. It could also still go up before it does the come down to buy upwards, but if it seems like it's going down further and further and further, then I think this is the best buying zone for me down here. If it comes down to this zone, it's good for buying into the weekly supply zones up here. But however, this is where another issue is. We also have a daily demand zone right here, and price is literally sinking right into that daily demand zone right now. What do we expect price do when it is in a daily demand zone? Obviously, the market just broke structure. That is the only daily demand zone that is valid when you look through price all the way to this low. And this is a zone that if it breaks, price is definitely heading for this structural liquidity and most likely heading into this weekly demand zone. If it can head down into this weekly demand zone, then we'll then have possible 4 hours buying pressure for our market to take us running all the way into that weekly supply zone. If this should stand, then this will take us straight into the weekly supply zone. But heading even further into that daily lookout, we will go into the 4 hours. And this is for us to try to determine what is really happening in this market on these low time frames for us to trade. But now looking into these 4 hours, I have one big problem. The problem here is, I don't know if this is from my broker or this is what the market really looks like. So let's just run a quick check on the euro against the Swiss franc on, let's say, the normal market, and it looks similar to me. Very similar. And what am I talking about? I'm talking about the wicks I keep seeing underneath the chart. Those wicks are kind of scary. So what I'm going to do is I'm going to check for euro against the Swiss franc on FXCM to see if that's what's happening. So what I see here now is those wicks are coming from my broker. This is how you know when your broker is trying to mess with you in some kind of markets. You can easily tell. So what I can see here is, I can see that this market in reality doesn't have those long bottom wicks just like my broker has in its own ticker chart. However, those wicks can still take you out. If I take a trade and place my stop loss in reasonable zones like this, it will get stopped out. So it means I can head back to my broker and use that to my advantage. So heading back to my broker, I'm going to look into that as an advantage. As you can see what I'm talking about right here, these long wicks. Now, how do I use this as my advantage? Well, it is simple. My strategy already sees a very good option for me here. So I have this low that led to a high, which led to a low that this low is actually lower than this low, even though my broker kind of tried his best to make it look very flimsy. It's tried its best, but they couldn't just should I say destroy the situation. And it's my buying hook, right? It's my hook here. So I have this high that leads to this low. This is the lowest point. And then I have this high, which has this low to it. Now, I think you're already seeing what I'm drawing from here. You can already see what I'm trying to aim at this point. So what am I aiming at? Is one simple thing. If price should find its way below this level I have here, there may be buying opportunities for me in this market. And this is just on the 4 hours within that price efficient zone. But this is the problem. I do not have a clear daily demand zone supporting that stance, and that is the problem I have with this particular stance here. So this is not something I can trade as of now. It's not something I can actually trade. It doesn't look perfect to me. It doesn't have that A setup. This is like a C setup in my opinion, because if it had that daily zone, if it had that daily demand zone down here, but it didn't have this structure, then it's a B setup for me. But now it has the entire setup, but it doesn't have the demand zone hanging directly onto it. So therefore, this setup is not going to work in my opinion. This is a price efficient zone, meaning if price should find its way below this demand zone, it would most likely continue like this to this downside. So what am I actually now hoping for in this market? What I'm hoping for is this. On the 4 hours, I'm going to go into my daily demand zone and I'm going to look for the same exact situation. Do I have that situation just before this structural liquidity? And yes, I kind of do. I have that zone here. I have this low to the high all the way to the lowest point. And then I have a high right here. This high actually broke above it. So there's this high, but I don't see this low as reasonable enough. That's why I'm taking this one. So I have this scenario up down here. So this zone is much more viable to me as a zone where I would like to buy from. This doesn't mean the other zone is not valid. It means this is much more valid to me. If I should give it a percentage rating, I think I'll call this a 90% chance of working out for me for a buying situation. I'll call this a 90% chance. I can't anchor this actually. Sorry, I won't anchor it. I'll just make it constantly roll around with that structure. Perfect. And then from this zone, let's see if I have buying opportunities with this zone here. So with this zone, what I do have is I do have a tendency of a buying opportunity. I have that same situation, a low to a high, to a lower low, to a higher high. So I have the beginning of the entire situation, but I don't have inducement. I don't have structural liquidity or inducement on this time frame. And I don't have a supporting zone for us to look out for. So let's go down to the 1 hour. On the 1 hour, what does this look like for me? I'm going to have to use a slightly different strategy right now. Being that I have that break of structure to the upside, I am going to look into this whole zone on the 15 minutes. Why the 15 minutes? So the 4 hours lead to the 15 minutes for me. The way it is the 4 hours leads to the 15 minutes and the 1 hour leads to the 5 minutes. So the 4 hours looking into the 15 minutes, what do I want to see? I want to see the exact pattern, this exact pattern down here. I want to see price make a move and a break above just like this and come back to create structural liquidity. If it can create that structural liquidity or inducement at this point and leave behind a perfect zone for me here, I'll take that as my seasonal opportunities to come into this market. So what am I saying right now? What I'm saying right now is, let's take a look at what is happening directly on the chart. This low obviously does not exist. It was created by my broker for a fact. I can tell that. This low, I can believe it exists because I've not seen this unnecessary long wick as I see here. So this is fake. In my opinion, I'm going to show you what I mean. In my opinion, this is fake. This is fake. This is fake. Because it's fake doesn't mean I can't get stopped out with it. My broker takes price all the way down here. I'm stopped out. But this is, to me, a zone where I'll place my stop loss for a start, right? Now I have the first thing I'm looking for. I have that low, the high to low, and a break of structure to the upside. What do I want to see? A low that does not take away this zone I'm seeing here, and a high that breaks above that low. If I see this, I then have a reason to buy into this market right here. I would buy and place my stop loss way below here. So for now, this is just a monitor the chart kind of trade for me and see where it goes. So I hope you understand what I explained in this entire video, the entire breakdown of euro against the Swiss franc, all the way from the monthly to the weekly, daily, 4 hours and 15 minutes, even the 1 hour, a little bit look into it. But all in all, this market is, again, a low volatility market. What do I mean by that? It means if I should even enter a trade here, let's assume, for example, I enter a trade now, I don't expect this market to make me profits in the next 1, 2, 3, 4 days. This market is going to roll slowly for about a week, 2 weeks before it gives you profits. Same thing as a volatile market, it runs instantly. This one doesn't run instantly, it grinds slowly to that position. That is the difference between the euro, Swiss franc, and some other markets. A low volatility market, a high volatility market. If you're trying to understand what I mean by low volatility and high volatility, I have a video right here which you would like to watch and learn exactly the difference between low volatility, high volatility, and how they do not really care about trending or not trending markets. Thank you for watching. See you guys in the next one. Peace.